What's up, everybody? How's it going? Crazy. Starting early. So, yeah. Let's throw up the banner here. Welcome, welcome, welcome. We'll get to you here in a second, John. I thought I'd start the stream a minute early here, get everybody in here, chit chat with you before we start at 5 o'clock. Give you just a minute to chit chat. So, yeah. How's it going? Anybody here? Kimberly not gonna chat? You gotta chat. I mean, hey Brian, good to have you, man. If you're brand new here, make sure you give me a shout out. I will take requests here in a few minutes, and if I don't hit that one, make sure you hit me back, because if the chat gets going here, I may miss it. So, distract others, no big deal. I've been commenting on that for all week, John. I do a live stream every day. We talk about that stuff. There were 2,241 commercial banks at the end of the year, beginning of this year. I guess 3 are now completely gone, at least. And there may be more that go the way they dodo, especially if the Fed raises the rates tomorrow. We got the FOMC rate change coming up tomorrow at 2 p.m. Eastern. Make sure you're prepared. We got about 1 more minute before 5 o'clock. If you're brand new to the stream, please let me know in the chat. You will have to click the subscribe button to be able to chat, just so you know. Hello, not new. Glad to have you, Kayleen. During the 1930s, I don't know, there weren't as many banks in the 1930s. In the 1980s, we saw, I was just looking at 8 banks failed in Knoxville, or from a company in Knoxville. That, funny story, this over there, the big gold ball there was built by the butchers as part of the World's Fair. And his bank went under in 1980. We were talking about this in Discord this morning. We need to pull that up while we're getting ready here. There was a lot of banks in the 30s. I mean, but, it's nowhere near the banks we have now, is what I'm really kind of... There's a lot of banks, but not really a lot of banks. A lot of small banks. Now we have a lot of multi-billion-dollar banks. Let's see, where did that link go? I posted in here. Well, I talked about options a lot yesterday. Here we go. I need to pull up a couple charts here real quick before we get started. Let me grab my seasonality chart. Oh gosh, man. Discord being super helpful. And seasonality right here. Open that one. Throw it up there. I'll get with you in just a second. Oh, crap. That was not what I meant to click on. There we go. And that one. There we go. All right. So, welcome everybody. Welcome, welcome. It is 5 o'clock. If you're brand new to the stream, make sure you subscribe. You can chat with me and let me know you are brand new. I'd love to have you. I look right off the screen here at the chat. So if you see me looking over, that's the chat. And you guys are right there. So glad to have everybody. It is spring. Welcome to spring 2023. We have the spring season. We're going to talk about seasonality just a little bit. We've got the FOMC meeting coming up tomorrow, the rate change. We're going to talk about that pretty in depth. And as always, I'm going to take 30 minutes and look at all your stocks, at least 30 minutes. It may be much longer. We'll see how it plays out here. So let's look at this right here. Jake Butcher. This is right off of Wikipedia here. He was a East Tennessee guy, one of the primary promoters of the 1982 World's Fair, which, if you heard me a second ago, this little thing right here is the World's Fair ball, or, I don't know what we call it. That's the World's Fair Park is right there. It's one of the only things left in Knoxville. There's a few other things, but that park and there's an amphitheater right beside it that are all left over. And the rest of the buildings have pretty much been demolished. So, but we keep maintaining this little thing. It's built in the biggest ditch in town, but it's one of the most notable things of Knoxville. So I always show it off on the streams here. So he was in charge of that, but his big known thing is from the bank fraud. The two biggest buildings in Knoxville, both built by him. And right here, the United American Bank was the fourth largest bank failure in history at that time. When it failed in 1983, took down like 7 other banks. 7 other Butcher-controlled banks went down with it. And then he became insolvent, as he had assets of 12 million and liabilities of 32 million. Went to jail for a good long time. 20-year prison. Got out in 92 and died not so long ago there in 2017 at the age of 81. So bank failure is something that our country seems to thrive on. I don't know. So, all right. Anyway, moving on. The next thing I want to talk about, seasonality here. Let's zoom this up so we can see it better. And maybe not that big. So we're coming in right here. We've been in a pullback. That looks like what we did, right? Came back almost to where we were at the start of the year. Look at this, seasonality-wise. Spring season. Happens to be a big rally, and then sell in May, go away, kind of flat through the summer. Through July, then we start kicking it up a little bit. August is usually a dud. And then September, a little spike, but a giant pullback into October, and then a rally to the end of the year. So, don't discount the fact that we may be about to embark on one of the biggest rallies of the year. Certainly the biggest rally of the first half of the year. All right? Like, this catalyst that we've got tomorrow is going to make or break this first half of the year. This may be the most important FOMC announcement that we've had in years. We've got the face of bank failures. We've got, if they raise the rates, it's going to put extra stress on the banks. And, it's like the tale of two stories here. Either we continue down the road of fighting inflation, and Jerome Powell has worked so hard for him and his cronies at the FOMC to be known as inflation fighters. So we either maintain that course where they try to fight inflation, but really, how do you fight inflation when you just pump $600 billion into the market on the other side? Oh, well, the banks are going to pay for that liquidity. Yeah, right. My butt. Since when is that ever the truth? The banks are not going to be the big ones paying for it. It's a liquidity injection, and it's inflation. It's inflationary. It's a liquidity injection. I don't care what they want to call it, what they want to make up the new rules for. You back up the truck with $2 trillion, you unload $600 billion of it in a week into the markets. That's an inflationary. All right? It doesn't matter what you do with the interest rates at this point. They might as well cut them. And, here's the other thing I wanted to show you on seasonality before I forget about this. We just came off of this, more than likely, and we're probably headed down here into these lows. I have a SVXY position. That's short VIX. If you've never heard of it, SVXY goes up when VIX goes down. I have a position out to June because I expect VIX to drop and return back to normal. Normal being around 20 historically. So we'll probably see VIX drop off. If you want to see me pull up a VIX chart and talk about it more, just ask for it when we get to that part. So back to talking about that. We've talked about seasonality here. We're going to talk about FOMC just a little bit. And before I talk about any trades or anything, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here, informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, hire and consult a financial advisor, because I'm just here for entertainment, all right? Look at this right here, DGS2. We saw it drop over a point, over 1 percentage point. Now, the Fed always chases DGS2. If you think the Fed's setting the market rate, I'm here to be a shocker to you. They're always chasing the 2-year Treasury. Now you could say the 2-year Treasury leads what the Fed puts out as they're going to do. You know, they put out these tips and blah blah blah. Well, look, I mean, DGS2 came off the bottom back here in September, and by the time the Fed did the first rate, it was already up at 1.3%. Did the second rate raise right here? We were already up to 2.5%. Kind of went sideways a little bit. They chased and chased and chased and chased, and they caught it. Caught the rabbit. The rabbit looked like it was going to run higher, but then dropped. So this creates an interesting situation as far as I'm concerned, where if they raise higher, they create more divergence in these rates, and it's going to create more financial stress. And it's more, I keep calling it systemic risk, but it really is systemic risk to the markets, because the banks aren't counting on the Fed being up here and the market rate being down here, or vice versa. You know, these divergences in the market create problems. Everything needs to be balanced. Why do I think it dropped? Is because the Fed was pumping liquidity in the back door of the market, and people are taking their, people aren't buying treasuries. Treasuries are a supply and demand situation. People quit buying their treasuries. The price plummeted. All right. So all of a sudden, while real market rate dropping, the treasury rate dropping does help banks a little bit. But if they pull the federal funds rate up more, this is going to, something's going to have to happen there. All right. Like either this one's going to come up, or their Fed funds rate, the overnight lending between the banks, is going to create a problem, because they're lending at a higher rate between themselves than they can go to the Treasury and borrow money, or all the other lending facilities that are available off of Treasuries. It creates problems in the market. These things need to be in balance. We were in balance for a long time down here at the bottom. Last time, every time this kind of freaks out, we get a financial crisis of some sort. Here's the housing bust. Here's the .com bust. This is the freak out that was December 2018, 2019. So that's one of the biggest quick, fast drops in treasuries that you can find on here for a long time. And it doesn't look like it's going to slow down. So something's happening here. All right. All right. Moving on. Let's talk about different stuff, shall we? Did I answer everybody's question on banking and the problems that we've got before I move on? Craig, we get you. Arthur, get you. Anybody got any more questions about why this is a problem right now? At the last FOMC rate raise, I kind of prophetized, predicted the future, that we would see a period of sideways. And I kind of, if I was going to bet on it, I bet on no rate raise, no rate cut, just a sideways period, a hold. I did have the blue coming down below the Fed funds rate and holding in there and then taking off again. So we could see that. It's entirely possible. We just hold. we hold and hold and hold for a few months, and then rates start taking off again. That was something before the banking crisis ever came up back in January. That's something I drew on this chart. So, yeah, no cut, no raise though. Like, that's kind of where I'm at. I think it exasperates the problem if they raise, but I mean they could. It could be a quarter point raise. It's a rock and a hard place though. And there's a lot of senators that aren't very happy with the situation right now either. So, bailout, they can call it not a bailout all they want, but it's still a bailout of, billions of dollars of people's money, and a lot of it not even in the U.S. Like, we're bailing out Chinese investors and stuff like that. So, yeah. Well, I mean, the Treasury backing accounts, they can only do that in an emergency situation without Congress approval or whatever. But, what are they going to do? I mean, if we pass it where we back everybody's account unlimited, what does that say? I mean, the overnight lending facility that banks have been tapping, like, that's a big red flag. Somebody was asking me today, well, if they just insured all the accounts, then nobody would want to move their money. Well, if you knew your bank was having to borrow liquidity from the Fed to stay in business, do you want to keep your money there? I mean, just at the chance that they have to close down for a few days to change entities, do you want your money at risk that way? I mean, I'd rather move my money somewhere else. I think that's what you're seeing, a lot of the companies moving their money around, as the list of companies that took advantage of the overnight lending facility. Those that's like a list of bad banks. It's basically it's like a big red alert on the hedge fund desk to short those banks too. Like FRC, you're seeing that one get nailed. This one halted, I don't know how many times today. But it went from 147 here, just, February 9th? 147-ish, right there, February 3rd, down to $15. And that's got to hurt somewhere. I mean, that's a lot of pain. But like I said, if everybody tries to sell their stock, there's like 10% of the money that can come out of this. So if they were, whatever they were up here, there was probably 10% of that real money. When everybody started selling, there has to be buyers. If there's no buyers, it just continues to plummet. So who wants the risk of that one? Looks like nobody. Anyway, yeah, buy Bitcoin. That's a whole different thing. That's a different conversation about Bitcoin too. Bitcoin's basically like a big credit default swap. A lot of people don't understand credit default swaps and what that means. If you have credit, somebody that loans money is giving credit, right? You get credit cards. Everybody understands that concept, right? You get credit when you buy a car and you can't afford it. So you get a loan. Somebody gives you credit. Now, if you become insolvent, you default on that credit. Credit default, right? There's the first two words. You're defaulting on the credit. Now, what does the swap mean? The swap means you're taking that credit default risk and you're swapping it to another party. So a credit default swap is a contract that swaps the credit default risk from the party that's lending the money to you and puts it over to somewhere else and gets insurance. And it's kind of like insurance against you defaulting, or whatever lending, whoever's in this arrangement. All right, whoever's doing the lending, they're getting insurance against you defaulting, or whatever party. So the federal government has $31 trillion of public debt that we admit to. We have another $185 trillion in unfunded liabilities for the U.S. government. Add that together, that's $212 trillion of unfunded debt liability for the U.S. government. And that's the full faith and credit of the U.S. government, right? That we've made all these promises out there. So you look at the U.S. dollar is really $212 trillion of debt there's no, where's the asset? There's no asset. All right. Now, what if the U.S., was to default on that $212 trillion of debt? Where's the insurance against that? Well, that's what Bitcoin potentially is a hedge against that. Now, to buy enough credit default swaps through Credit Suisse or whatever, Swiss, however you say it, to insure the $212 trillion would take about roughly $3 trillion. So that would make Bitcoin worth $3 trillion. And right now, if we look at the total of crypto, it's worth 1.14 trillion. And if we just look at Bitcoin, its market cap roughly $500 billion. So you're looking at a 6x increase, 5.5x increase in Bitcoin's value just to ensure, just to be a default swap at the market rate for the US dollar. Now, if the dollar actually collapsed and Bitcoin took over, this 500 right here, $500 billion market cap would go to $212 trillion. All right. That's where the giant, crazy numbers on Bitcoin come from. That's why I've been a proponent of Bitcoin. All right. It's not like go put all your money in it. It's, put a little bit of money in it, and if things really come apart at the seams, it's going to hold some value. Now, if people look at it as a trading instrument, that's the wrong way to look at it. You got to look at it at the big picture as like a credit default swap, or it's right now it's undervalued by about 1/6 of what it's really representing the potential for. All right, something different from what we usually do. Now, let's run through the market a little bit. Talk about what we see, where we're at. S&P 500 maintaining that bounce so far. Target's right up here at 4,300. Yeah, that's right, Goose. It's insurance against the Armageddon drop of the dollar. I mean, that's that's the best way to say it. So now bullion has carry cost. Bitcoin has virtually no carry cost. Bullion, you have to either pay for storage, or you have to protect it yourself, or it has risks. So it's not quite the same. Plus, bullion has some other crap going on. But anyway, S&P 500 looking like we're holding the bounce on the simplest chart that I've been showing since last August. When we rolled over here, we have made the bullish breakout. We have held the back test. We need to confirm it by moving up through this 4120 area onto 4300. We'll probably get a retrace from there back to this zone one more time before we get the real move to a new high in the S&P 500. Now, there is still the risk that we break down and break through this support and make one more lower low. But right now, the chart is very bullish. This is a very, very bullish pattern. I'm about 78% betting that this is going higher, and only about whatever's left, 22% that we might see a lower low. Now, after tomorrow, if we're up here, I'm going to be like about 90% sure we're going at least to here and potentially higher. So that's the playing field. That's the numbers right now. Right here, looking at the more complicated candle chart, we poked back above the daily market roadmap line today. Just shy of confirming that we're going to move higher. We got to get on up, get above this high, at least right here. This is one of the first ones. This is the absolute confirmation up here above 4080. We're likely to see 4300 before we see a lower low of any type. Excuse me. I get my water here. S5FI coming on up out of the bottom, out of the reversal zone. This is beautiful. Everything working so far. ES still in that freaking consolidation zone. Couldn't get back up out of here yet. Got to get back above these highs. And there was a big uptrend line of, it's like a big channel right here of these highs, and we stopped right at the channel line, not breaking out. So in Q, trying to poke above. This thing may turn down. This is one of the only cautionary things. If we don't just pop out tomorrow on the FOMC, we may retrace one more time. A little bit caution right there. And Russell still just farting around at the bottom here. This one was the outperformer coming into this high right here, and now it's outperforming to the downside and becoming the laggard as NQ potentially catches up. NQ's been the laggard. Now we're seeing sector rotation out of those financials and into the big tech. And that's where we're at right now as we head into second quarter of 2023. Popping into the red list where I can get the other things that I usually talk about. Oil made the low. It finally hit the target that I've been looking for 11 months. This may be the reversal. Now, one of the things we were talking about in Discord was, let's see, energy. And where was it? Right down. Let's see. I can't even remember the ticker. What was it? Energy stocks? Not TSX, but trying to find it. There it is. SP Energies, right there. That's the one. Look, we're down here. This is oversold territory. There was Bank of America saw about $1 billion, maybe $1.5 billion float in energy last week. Energy can outperform. Now, JT, you say, how do I figure out what energy? How do I find the energy stocks? Right? We just pop back over here. Look at. Let's check out performance for the day. Why not? We've got the S&P 500 performance for the day, and we come and we click on energy. Look right here. They were all up, so except for the laggard right here. So go check out these charts right here. It's like a list of potential outperforming charts. And we can even turn off, there. All right, if you want to look at them over the week, there's your ones that seem to be outperforming. Want to look at them over the year so far, year to date. You have VLO, MPC. All right. XOM, not so bad. Chevron, obviously pulling back this year. But it has a nice pattern. I have a trade on Chevron right now. So, some of the ways to look at these things. All right. Now, popping on back over here. We have gasoline. Is not as weak as oil. Like while oil is making the lowest low in this cycle, gasoline is still working on a trend, trending higher. That's going to mess up Biden's plan, right? Natural gas did a measured bounce retrace. It's got to hold right here and start higher. If it does, it's probably going to go up here into this $4 area. If it doesn't, if it starts breaking down, it's going to go lower low, probably back to $1.50 or so. Gold probably is done on this move. It's probably going to retrace right back down here. Support right in this zone. If it doesn't hold that, it's going to come all the way back down to this roadmap line one more time, even with the dollar dropping out. So watch for these levels of support right in there. I went ahead and closed my GLD position. If you were on one of my lists or anything, I had a 185 target. We came up just shy of that and started peeling off, so I closed my position. I got in down here at the aggressive entry around 170, 175. So yeah, gas is likely to go higher. That's gasoline. Gasoline trades independently of oil. Everybody thinks it's tied together, but they are independent. Right, look at those charts. Look nothing the same. So that's one of those things. Like, you want to know where the prices of gas come from, gasoline. you got to go to the gasoline futures chart. Now, this is without taxes and all that stuff. So the $1.50 of taxes we pay adds on top of this. You know, depending on what state you're in, how much tax it is. There's like a federal tax of 80 cents or something like that. Then your local tax of whatever it is. That's why California's gas gets to be $6 because they got like $9 of local taxes or whatever. Anyway, copper looking like it can run higher here. Have a downtrend line that we need to break out of. Start breaking out of that. Resistance right here at 418. Out of that, it's, you know, runs higher. FCX is a way to play this. I had a target right here. We came just to the top of the target. Got here faster than I thought we would. But we could see the bounce. We got to here earlier than I thought we would, and we're getting here earlier than I thought we would. So the next move is going to be up here around 50 on FCX. Lumber peeling up off the bottom just a little bit. Housing right here. Let's pull this up on a weekly chart so we can actually see. Looks like we may see housing weakness even further. Now, this is CME housing futures. We were showing a little strength coming into this year, but then all of a sudden looks like we're going to break down, potentially extend lower back down to 250 or so. All right. And if anybody's got any questions on other futures like corn, sugar, lean cows, pork, soy, whatever, we can talk about those if you want to. Bitcoin, before I take your requests, just briefly touch on Bitcoin. Has a nice potential move going, and that's not the right chart. That's not the right chart. There's the right chart. Potential target right up here around 34,000 right now. Based on this pattern, we are closing back above the weekly roadmap line. We have bounced off of the daily roadmap line. This thing is looking primed to go right up in this area. We can break out higher, but that right there completes the head and shoulders pattern that we had back here. That's not even on this chart. So there was a giant head and shoulders pattern. That completes it right there. Then we'll see what happens. We do have the halving event on Bitcoin and all the other headwinds. So, all right. A glut of oil is all relative. We just had the lowest monthly production of oil in whatever it was, 8 years. 9 years, 12 years, I don't remember. I don't remember the statistic. But we just had the lowest monthly oil production out of wells that we've seen in a number of years. So that doesn't seem like a glut of oil. All right, circling back around to requests. Let's see if I can pick up some of these ones from earlier. I saw SLI. Looks like a pretty bad chart. That's bearish. That's LAC. That looks bearish. And target's down here. We've got Mora is bullish with the target up here at 14. If we start breaking out even higher, up here around 22 to 30. And it's got lots of things going on. So that's a measured bounce setup. That's the target right there. Basically around 14, 15. 13 to 15-ish. Then we'll probably get a retrace, and then we'll set up for another big move higher. All right, Beto. The target is around 22 right now. Right up here. 20 at the minimum, 22 at the top. That's what I'm looking for right now. That's a measured bounce setup also. That will probably get a retrace after it gets to there before the next move higher. And then NVDA is about played out, getting near the target. Target zone, it's a big fat target zone from about 260 up to about 330. I'm not expecting a whole lot more. We could see it rise to the top of this, but we're probably going to consolidate in here and rest. That was a big move up from NVIDIA. I do have higher targets on out here, though. After we rest for a little bit, we could probably see 460 on NVIDIA. And Amazon, I am still quite bullish on Amazon. Looking for it to return to this high at the minimum, right up here around 113. Now that we're trying to close above 100, really trying. We get back above the roadmap line here at 105. We're going back up to this area, 112, and probably gonna chug right on up through this box and head right up here to 140-ish. I took my shorts off. I had short 160s against my positions. I sold 160 calls out until late summer. I closed all those today, and now I just have calls. I may put on something else new tomorrow. Stay tuned in Discord if you want to find out. If you want to know how to get in Discord, go check out the description below the video. And I think for $5 you can get in there. All right. I see ABBV. Sideways with a breakout potential. That is a measured bounce type setup in there. Target up here around 190-ish. Might take a little while. This is getting a slow start here. We've still got resistance up to about 163. We start getting above that, and we got resistance at this prior high, 168.50. Get above that, and then we can finally potentially get a nice little run up into this 185 to 190 area right up here. All right, moving on. IoT. Oh, wait, CRWD is what I see first. CRWD, right there to the roadmap line. Filled the gap. Had this gap right here. To get above that is bullish, but we do have resistance right up here. So get above the roadmap line, may see a rise up into this area. It doesn't have any real pullbacks, so to speak. So at some point it's going to do it, and it may kind of come up here a little bit, maybe where one of those prior highs was, about like that. Where this kind of flip point is, right across here. See where these lows. Held the low here, kind of started softening it up. That was the high there. That's kind of a flip point, all right? What I call a flip point. May see it come up to that, then come back and retest that roadmap line right there. Something like that. All right, that's CRWD, ANET. Wow, that's just straight up. Next resistance up is not on the fibs right now. Load the template. Looks like next resistance up is right around 180. Remember, the faster and higher they go exponential like this, the faster they fall too. And at some point, it's going to do another retrace, probably an echo of this one right here. May take it right back down. So be careful on that one. I'd be looking to book profit if you're long on that one. All right, IoT. Yeah, we can see a pullback that's similar in nature to this one right here. Oh, look at that. It did it. Like, that's almost perfectly. See that right there? That was almost perfect. So that can be... So this run right here that we saw right there, they can do that again right there. Take it right up here to about 28. It's an echo in the market. It's where we see similar moves and then similar moves. So this run right here, right like that. Pretty cool, huh? So that's the kind of setup we got right there. If it starts failing below about 1650, it's probably coming back down to the roadmap line. And be careful. It's got a little support coming across there, right in that zone right there. And gapped up. It may fill that gap before it can go. Maybe. All right. Google. Yeah, it's got resistance at the prior high. This is what I expect Amazon to start doing. Go retest this high from back here, and then break out and run on up and test that prior high from back there. Same thing for Amazon. Google and Amazon kind of following the same path here. GE, and it looks like extensions right there. Yep, finding resistance at that 3618. Probably likely to get a retrace of some sort cooking here. May come back and test that orange consolidation. It had trouble breaking out of that before. Ran right up to the next fib level. May retrace back. Just be careful. All right. OXY. Just stuck sideways as oil farts around. This is one of the... This drifting off is not strength. You know, despite all of Warren Buffett's investing in it, he's playing the long game, remember. So this thing can stay stupid longer than you can stay solvent. All right. NBA. Yeah, it looks like it's about to almost down to the roadmap line there. Looks like it might want to do one little blast push. Although that can be enough, but it looks like it wants to go one little bit lower. One more push down there. All right, INTC has been the laggard in chips and rejected. Watch out for it to go right back down here. It does have support right here. If it bounces off of that and can break out above these highs, you know, it's high, 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 get above that, gets above 31.50, we could probably see it come up and try to test this gap down. There's the parameters though. A return to the low that it's been to twice already, and be a triple bottom, and then maybe launch. That was like a triple top, so just a sideways consolidation, and that may lead to a lower low. Be careful on Intel. All right. There's a reason I haven't been trading Intel. AI. Yeah, it looks like this call for it to come back to the roadmap line may eventually pan out. We'll see. That was a lower high. So what we have cooking here, we had the first move down and the third move down, fairly close. That could be all it consolidates. It doesn't have to touch the roadmap line. It doesn't have to. That could be all she needed. Hard to know on that one. That's unclear if that's going to be the reversal or not right there. It still could reach down one more time. I would feel a lot more confident about it if it reaches down, holds support right here at the roadmap line, and then bounces. Right now, it's unclear until it breaks out over these highs right here. It's basically mucked up this. It rejected that area twice now. Once, twice, very hard, both times. So, doesn't give me a high degree of confidence that we're going to see a breakout. All right. Next ticker on the list. I'm sure y'all are talking to me 100 things down here. XOP. Looks weak. Run that little... Yeah, looks like it could extend lower potentially. Came up shy of an echo off of that high. That looks kind of like 1, 2, 3, 4, 5. Looks like it wants to go a little lower. All right. PCT. Looks pretty bad. Not sure why you would want to trade that. You trying to pick a bottom? I mean... That... I don't know. That's pretty gnarly. I wouldn't even be trying to pick up the pieces until we were over this crap up here. That looks like the danger zone up there. Ah. Anyway, CAT. So much better stuff you can chase after, Shane. Come on, my man. Maybe holding on to the roadmap line. It poked a little deeper than I want. It went back to the 618 there. Bounced up. Back above this. Can get up to the target zone right up here between 270 and 290. And that was a nice 1, 2, 3. And looks like it might have been echoey. Oh, yeah. A little bit of extension on the third. Down to 1272. That's exactly what we expect. Breaks out above this little gap down here. Gets back above, say 241. It's probably coming up to this green zone between 270 and 290. All right. MRK. Looks like it's almost to the roadmap line. Working its way down. A little bit to go. Find support there. It can bounce. It's got resistance up here now, around 110. And GILD is at the roadmap line. That one, have to expand this up so you can see. So we had basically an echo type trade. Same thing I keep talking about. We had the first move down and the second move down. Held the roadmap line. We held above that 76 where the pattern breaks down. This was my chart of the week here last week, I think it was. So if we start breaking up above 82.50, that's the aggressive entry here. Right there, that where that line comes across. Resistance to clear is at 86, and the target up here around 92 on GILD. I drew this on a bigger screen, so it doesn't exactly fit all on here perfectly. All right, J&J. So you got right down to the target. Got there faster than I intended. So, yeah, I do pay for. I pay for TradingView just so I can save all these gajillion watch lists I got in here. Yeah, all these watch lists. So if you want to get the market roadmap watch list every week, links in the description. Put it out every single week. And you see some weeks are a big list, some weeks are a little list. Every week. Anyway, J&J right down here, holding support, and that's another one. Echo 1, 2. Holding in the zone can be bullish. Target's up here at the prior high. But right now, it may extend down to 146. May. Looks like we're getting a little pop after hours, but not so sure. It's not really gonna tilt its hand unless it gets back above about 165 here. That was a ginormous pullback. Big three-wave retrace. All right, moving on. PayPal, PYPL, looks like a horrible chart. Stuck in this little watermelon seed squeeze, triangle wedge thing. Low, low, and keeps riding the downtrend into the lows. We're running out of runway here. Not much left, not much room left. It's gonna do something. Is it gonna break up or is it gonna break down? So far, it's been held in by this downtrend and the roadmap line. That 2 days it poked up there, couldn't keep it, went right back down. I'm cautious. We could push down, the target's down here if it breaks down, 42. If it can break out, we've got tons and tons of resistance above us. It needs to be above 88 at the minimum to even kind of suggest that it might go higher. And we're in a big pink box that's been consolidation, and it dropped out from that March last year all the way down to June. It just plummeted, and that created this big pink box that, you know, has basically been where it consolidated from back here in November 17 to the highs in July 19, and then again in February 2020 before COVID, and even the high it made in April before it gapped up. So it's a giant consolidation box, and it consolidated right there, and that's probably the range it's stuck in for now. So 70 to 130 or 125 ish. PayPal just not looking as hot as something like Square. Square stuck right here on the roadmap line, but if it can break out above 85, actually 95, the prior high right here, we can get a bigger move up. Resistance right up here at 147. But right now, we're stuck on the roadmap line. Trying to get out of here. Just can't do it. But at least it's not stuck at the bottom like PayPal. HUT is a piece of garbage because they're doing a reverse split. I would avoid this. If it was my money, I would not touch this right now until after they do whatever reverse split merger crap with, what is it, Bit Mining USA or whatever. That's on my danger do not touch list. I liquidated this and went into BTBT because it had a better potential to move. And I don't have it drawn on this chart, but let's draw it really quickly. Pop up, retrace, that's a measured bounce setup, takes it up to 230 at the minimum, and more likely up in this $3 area. So you can go $1.50 to $3 right there. When is that split? They didn't announce it yet, so we don't know. It's like it's something stupid too, like eight for one. I don't know, something stupid. And then when they do the merger, you don't even get a full share. It's like a 5 to 4. It's something like, go read the press release. It's stupid numbers. I'm not keen on reverse splits or weird mergers. So Tesla, TSLA, nice little pop right into the roadmap line at the close. I would like to see it gap up tomorrow, although it looks like it got a little bit of pullback. A pop up here is probably going to lead to a test of this downtrend line. Why the downtrend line? Because it's been intact since back here at the market at the tech high in October, November of 21. Really, it's November 21. You know, lower high, lower high, lower high. We need to test it again. Probably rejected the first time. It's just like the S&P 500. I mean, this is what I'm looking for Tesla to do right here. This pop up, test the trend line, retrace, break above, come back, test the trend line. I talked about this morning. Same thing right here. Pop up, test the trend line, retrace, pop up through, run out of steam, come back, retest the trend line before we can move up. Same pattern. This is a common pattern in the market for a reversal. All right, if you're looking at a downtrend and you want it to reverse to an uptrend so you can make money on it, look for something like this where we have, draw your downtrend through the highs, comes up, rejects off of it, retraces, pops up through, and we got a little secondary rejection there for like a day before it popped up through, came back, retested, held. Time to move higher. Time to get out of here. Time to quit messing with this downtrend line. So that's what I would expect on Tesla right there. Pop up, go retest this, pull back, hold the roadmap line or potentially this flip point line, break up, run out of steam up here, somewhere around 300 maybe, come back, retest it one more time, probably back down to 200. It seems like it's going nowhere, and then go. All right, that's Tesla for you. Coin was looking pretty good today. Nice moves right back to the prior high. If we can break out above these little highs right here, zoom it up so we can actually see. If we can get above that rejection tail, this thing is likely to get to this 110 area where we had this prior high. Another rejection tail, a candle, wick, whatever you want to call it. Tail, wick, I don't know. Everybody has their names for them. I call it a rejection. When it spikes up and rejects it, that's a rejection tail. We'll come up here and test that at the minimum. So 110, if we can get above this one. And that was 2 days right there. Form that little bitty box right here. Ah, come on, box tool, box tool. This little bitty box right there. We get above that, above 88, 110. Now the bigger potential, if this is going to turn bullish, we get right up into this zone. I had this target hanging out here for a long time. 130 to 140. That'd be super ideal. And then I've got targets on up. 145 would be super nice to see for some of my other patterns on other charts. So we pretty much made that downside target right there, and we're forming a reversal. So this can be the lowest low that coin sees for a long, long time. All right, moving on. IYR. I've been talking for a long time. Whole hour now. That does not look overly bullish. I would be careful on that going lower. Goes back to the futures on housing. Be freaking careful right there. Let's see, DHI. Yeah, DHI looks stronger than that IYR. Not so sure on that one. That looks kind of bearish. That's breaking. That's pushing lower than this low. I'd be careful. All right. Did Google, PNC, GOG, and GOGL are basically the same. So if you missed it, sorry. Rewind. That looks like it's going lower. It's probably going to retrace here and continue lower. Got to the 1618 target. Yeah. I can't even suggest where it might retrace to, but that. Not picking bottoms. I kind of knew it was going to come down to here. It extended down to that one. So, danger, Will Robinson. If you were wanting to spread your risk around, this KRE looks like it could potentially bounce. It has a big potential, bigger, much bigger pattern here, where it retraced in a three-wave type fashion down to here, with that last move being epically fast. We start breaking up through 54. We are likely on a path to go up to 76, potentially even up to this $90 area. And then there's the bigger pattern that puts it potentially up to this 110 to 120 area on KRE. That's regional banking, if you were curious. So there you go. If you want to play banks, I'd spread the risk around, go with something like this at this point. It's not advice. That's just me talking. All right. JPM. Potentially going to reach down to this area right here. That would be a beautiful measured bounce, 618 retrace, because it did one swift move up off these lows and retraced back to this area below the roadmap line. It would look better if it did a 50 or 618 retrace, 122, 117.8, roughly somewhere down in that zone. One just nice spike down there, then it can reverse, and that sets it up to go much higher. Like ridiculously higher. Not even, don't even have kind of the targets on the chart right now. If we can get down to here, that would set it up to probably go up to this 185 area. But it needs to get down here. Otherwise, this is like a weak setup, and it probably won't extend that high. But it sets it up for that. All right, DPST. And that one doesn't look as awesome. Sorry, Goose. See how that's just right back at the lows from back here. Popped up and came right back down. These leverage things don't always follow the pattern, but it has these splits in here. It's a 1 for 10, reverse split. That's a 5 for 1, regular split. That messes with the numbers, so makes it difficult with the 3x on there. Carry much easier to chart on the long-term pattern here. See how those lows much lower, it didn't just come right back down to those lows from back here. So, all right, NRG. That looks pretty horrible. It's a big sideways nothing. Like, why would you chase after that? There's no trend. There's no, I mean, sure, money may flow in energy, but this looks horrible. All right. And it was not lost on me that, we're talking about energy, NRG, and energy, the sector. So this has been sideways from all the way back here. Look, going nowhere. Try to break out, 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 all the way back down the bottom. And then this is before COVID even. Like, what makes you think this is going anywhere? All right. Be careful on something like this. Sideways is the name of the game here. All right. Rio. Hey, no problem, man. That's what I'm doing this for. Taking requests. Way over half an hour today. Rio. Let's see. That's what I want to see on JPM right there. This has potential. Let's remove that. Has potential to get going here. Needs to get above those highs right there. Back above 76. Can set it up to go up to this 101 to 111 area right up here. Right up in there. Probably 93 at the minimum if it breaks out above 81. And that would be the ideal bullish target. Then we would retrace and then go higher. All right. XRP. People have been talking about front running the news on this for forever. I mean, it does have a little bit of bullish pattern on it. A little bit of potential bullish pattern, but that's pretty horrible. You have to break out over 50 to really get any kind of continuation. It could, if it stops at 56, you know, basically just above the prior high, that's bearish and probably going lower. If it can get up to 70 and then before it retraces, then it can get continuation. Probably retrace something like this, back to that area, and then get another move. If it just bounces down off of this, that's bearish. That's kind of the path right there for XRP. Just based on technicals. And anybody that's been around here for very long knows that I tend to get it right more than I get it wrong. No problem, Penny. Yeah, Matic is... Let's see, let's get a real Matic chart up here that I've actually drawn something on. So I've got a potential entry up here about 130. This was chart of the week from 2 weeks back on the newsletter for Prosperity Pub. Conservative target right now, 210. I'd hold off until it breaks above these highs right here. If it starts breaking on down below below 80, 75, below 75, looks pretty bad. But right now, holding the roadmap line. This, if it starts going here above 130, 210, and I actually have a much bigger target for this, like of $8. But it's not on this chart. It's on the. It's for my Crypto Power Plays members. If you're interested in that, you can come check it out. So, anyway, and ETC has a bigger pattern cooking here. I don't have it updated on here. Oh, market's back open. Futures are back open. It's right here. Went super deep, a little too deep for me to feel all warm and fuzzy about it. Off that high, not that high. But if this thing can get out of its own way, the bearish case is for it to rally to 47, and the more bullish case is up here in the 60s before the next big pullback, big being like this one. And then it has a little mini 1-2 potential in here. Little baby. If it can break out over that prior high, probably get up into this $30 area before it retraces again. Needs to hold above that high still and get on the way up into this area up here. The 47 to 68 area up there. Not quite as clear a pattern as Matic. This is a little more muddy and mucky. So be careful chasing that one. And ADA, that one looks a little cleaner because this was the lowest low. One big move up, one retrace. Very proportional. Nice 618. This is a measured bounce setup. That immediately, this is like the JPM type setup I was talking about. 48 if it's bearish. If it bounces down at 48, it's going lower low. If it can continue up into this area right up in here, that would be a bullish setup. We'd probably see a retrace right back into this 45, 50 area. And then a break, a move that matches the first move. How do I know all this stuff? Because I spent years learning how to do this. Somewhere 65 for this move. It could extend all the way up to about 80. So there's numbers. Yeah, Mara's back there somewhere. It's in the history. We did Mara. Litecoin, sure. This one has a halving event in August. It has a 1-2-1-2. It's just based on the potential 1-2 right here. Looks like we could see, yeah, that's why that, oh, right there, 122. That's why that thing's right there. About 122 is where I expect, if we're bearish, if this is like a bearish correction-y type thing, turns down here, probably going lower. If it can break out there, up into this zone, and then retrace from there, and break higher again. But the halving event is right out here in August, and that may be where we get this high right here. Break line, somewhere right around there. Is the halving event on Litecoin. Does it have to outperform? Does it have to do this? No, it can just break down here and fart around and not do anything. So, all right. Market's open. Glad you could spend some time with me. I have Morning Monster. Kimberly got me these beautiful new Monsters. 6% alcohol, no caffeine. It was fun this morning, and then it got rough. I tell you. I'm just kidding. I drank that last night. They have no sugar, no caffeine, so I'm not even sure why they're Monsters. They're just alcohol. But they're dangerous. They taste like nothing. I mean, they taste like, just, you know, tastes super good. I mean, it was like Boone's Farm Fuzzy Navel is what that reminded me of when I drank it last night. So, anyway, come see me again 9:15 in the morning. Make sure you're subscribed if you want the notification. Hit the bell with the little thingers. And yeah, I wish I could get sponsored, man. I got Monsters everywhere around here. Monster. Somebody from Monster, reach out. You know, I'll take the sponsorship. We'll put the thing, put your logo on the back. Anyway, all right, everybody. Thanks for coming. Had fun. Hope you learned something. If you came in late, you missed something. Rewind. Like this is all it's all recorded already, and it'll be high def. You can pull it up on your TV. Whatever you need to do to see the charts big. I'll see you in the morning. Make sure you subscribe, hit the bell for the notifications. 9:15 in the morning, I'll be live again. I'll have the link up here in a minute, and you can join this live stream as soon as that link pops up on my channel. So, see y'all later. Have a great night. FOMC tomorrow. Be freaking careful. The money you save may be your own. Don't bet too big either direction. All right? That's my final warning.